The audit, conducted between 2019 and 2020, found that the department failed to properly manage its funds, resulting in a substantial loss of revenue for the state. The audit's key findings. The audit, which was conducted by the Louisiana Legislative Auditor, identified several critical issues with the department's financial oversight. Some of the key findings include: the department failed to properly account for its funds, resulting in a significant loss of revenue for the state. The department did not have adequate controls in place to prevent embezzlement and other forms of financial mismanagement. The department's financial reports were not accurate, and the department did not provide adequate transparency in its financial dealings. #The impact of the audit *. The impact of the audit. The audit's findings have significant implications for the state of Louisiana. The department's failure to properly manage its funds has resulted in a substantial loss of revenue for the state. This loss of revenue has had a ripple effect throughout the state's economy, impacting various sectors such as education, healthcare, and infrastructure. The consequences of financial mismanagement. The consequences of financial mismanagement can be severe. The delay in reconciliations resulted in a significant loss of revenue for the state. According to the report, the delay in reconciliations resulted in a loss of $1.2 million in revenue for the state. The state of cash management in LOGOV. A systemic issue. The report highlights a recurring problem in the LOGOV system: untimely bank reconciliations. This issue has been ongoing for some time, with regional accounts experiencing delays of up to 121 days. The statewide LOGOV system cash balance reconciliation is also lagging behind, with a delay of 163 days. This delay has significant consequences for the state, including a substantial loss of revenue. The impact of delayed reconciliations. The delay in reconciliations has resulted in a significant loss of revenue for the state. This loss is a direct result of the delayed reconciliations, which means that the state is not receiving its rightful revenue in a timely manner. Causes of the delay. The report identifies several causes of the delay in reconciliations. These include inefficient processes and procedures, lack of training and support for staff, insufficient resources, and budget, technical issues and system glitches. Recommendations for improvement. The report provides several recommendations for improving the LOGOV system's cash management processes. The audit found that the state's internal controls over financial reporting were inadequate, leading to a lack of transparency and accountability in the state's financial management. The audit's key findings. The audit, conducted by the Office of the Legislative Auditor, OLA, identified several key areas of concern regarding the state's financial management. These include inadequate internal controls over financial reporting, lack of transparency and accountability in financial management, ineffective use of technology to support financial management, inadequate training and oversight of financial management personnel. The impact of inadequate internal controls. The audit's findings have significant implications for the state's financial management. Inadequate internal controls can lead to financial mismanagement and misappropriation of funds, lack of accountability and transparency in financial reporting, increased risk of fraud and corruption, decreased confidence in the state's financial management. Recommendations for improvement. To address the audit's findings, the state should consider the following recommendations: implement stronger internal controls over financial reporting, increase transparency and accountability in financial management, improve the use of technology to support financial management, provide adequate training and oversight of financial management personnel. Conclusion. The audit's findings highlight the need for stronger internal controls to safeguard Louisiana's financial integrity. By addressing the audit's recommendations, the state can improve its financial management and increase transparency and accountability.